After the longest stretch ever without a 3% correction in the stock market, is one about to happen? Let's find out and welcome in Chief Technical Strategist at BTIG, Katie Stockton. Katie, I know you've been calling for a bit of a reversal soon. I wonder if today was the beginning, given the 300-plus point reversal we had for the Dow Jones Industrial Average top to bottom, do you think that today was perhaps the catalyst for something a little bit more meaningful?
It certainly could have been. I think it's too early to tell. What we're looking at are the short-term momentum gauges, things like the daily MACD indicator you've probably heard of, and those have not flashed sell signals as of yet. But certainly the S&P 500 and other major indices have had a really, really nice run year to date. So I am expecting a loss of momentum in the coming days.
You know, and the breadth has been incredible. There was a note out from one of your competitors that Friday, I think it was 30-some% of the S&P hit a new high. That S&P chart that you've got shows that, I mean, it's not just a couple stocks. Everything is taking off. But is it getting a little too hot to handle?
I think it may be. When you just simply look at the slope of the uptrend, it's obviously steepened in the new year. And that's a reflection of that positive breadth, that expanding participation in the market, which tends to be a good thing. But it does get to the point where it can be so-called overbought. And I think that's our status right now. And that's why we're going to be very sensitive to those short-term trend following gauges, watching for that loss of momentum. When we do see a pullback in the S&P 500, you can see here just based on the 50-day moving average, that support levels are quite far away in the range of about 5 to 6% currently. Over time, it does move higher, so the longer it takes a pullback to develop, in fact, the less dramatic it should be. But even still, say a 4 to 5% pullback would certainly shake the market.
If and when we get a pullback and we don't want to just go to straight cash, what should we be buying? Where's a margin of safety, if you will?
There's two ways to look at the market, from a relative perspective and from an absolute perspective. So if you're looking for relative performance during a pullback in the S&P 500, you can typically find it in the more defensive sectors of the market. And those tend to also be the interest rate sensitive sectors that have underperformed recently with the backup in treasury yields. It would include consumer staples, REITs, utilities, telecom. However, if you're looking also for performance on an absolute basis, which most of us are, I would look at the utility sector in particular because its underperformance has been very pronounced to the point where now we have an oversold condition in XLU, which is a utilities ETF, and the likes within a long-term uptrend. So finally in the utility sector, we're seeing some signs of downside exhaustion, but still within a long-term uptrend. And you can see historically, these oversold conditions have given way to tradable lows. So I do think that we may have an entry at hand in the utility sector, albeit not a sector that I would expect to outperform beyond the near term.
Okay, yeah, and I know from your latest note you were talking about gold, the commodity. What, if anything, does gold's recent run, which, by the way, may be the quietest run we've seen for gold ever, probably because of Bitcoin, what does it mean for gold miners?
Gold, from a long-term perspective, has been sort of sleepy, but recently has picked up momentum. We're watching for a breakout about 1380 in gold prices to signal a long-term basing phase being completed. You see that same basing phase here with GDX, which is a gold miners ETF. And within that basing phase, you can see here slight improvement in momentum, and that makes this area of the market somewhat attractive should we see a pullback in the more overextended areas of the market. You can see a very small uptick here in GDX, and if we did see a breakout in gold prices with more defensive positioning, it does tend to be looked at as a safe haven at times. I think you'll probably start to see gold and gold miners break out.
Utilities and gold miners. Katie Stockton, it feels a little bit old school, but hey, if we get that correction, maybe we'll, or at least that pullback, maybe we'll need to go old school. Katie Stockton of BTIG. As always, Katie, thank you very much.
Thank you.
And folks, thank you for tuning in to Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.